Hey, what's going on, guys? It's Sam Kwak, one of the Kwak brothers, real estate investor, and here I have with one of my trainees, Ricky, and we're going to talk about raising capital. And I know this has been a hot topic. I've gotten a lot of emails asking for a video webinar on how to raise capital. Now, you may have seen the disclaimer in the beginning of this video. I want to make sure you guys understand that we are going to talk on a touchy subject. My attorney was nervous. I was nervous about doing this video because the very nature of raising capital, we're hitting laws such as SEC laws, Securities Exchange Commission laws. We're talking about a topic where a lot of people have gotten in trouble because of misuse, whether they intentionally was trying to break the law, right, or it was accidental, right? They were just, they were being honest and they were trying to do the right things, but unfortunately, the law is the law, right? So I'm gonna give you guys that disclaimer one more time. Just want to make sure you guys understand that neither Ricky and I are licensed real estate brokers. We're not licensed securities broker. We're not a licensed attorney or even an accountant. So guys, please don't misconstrue this video as a legal advice or any tax advice or any securities advice. We're not doing any sort of specifics. We're going to give you more of a general broad stroke overview on one of the strategies that I've used in the past to raise capital. Now, notice that what I'm about to share with you is something that I've done in the past and before. I'm not going to give you any hypotheticals. I'm not going to give you any projections. I'm going to give you the best of my ability to kind of give you a story of what I've done as my first scenario in raising capital. Now, Ricky is one of my trainees. He's going to play your advocate. He's going to represent you guys for those who are starting out. Ricky may have a question on some of the things I'm going to share, and Ricky's going to go and ask those questions, and we're going to have a conversation through those things. So, and that's enough of disclaimers. We're going to get started with a scenario that I've actually went through to raise my first $60,000 to do a flip. Now, this scenario could have gone in two ways, two options, and I'll share both of those. Now, for those who are watching, and even for Ricky, have you guys heard of the concept of self-directed retirement plans?
I have.
Okay.
Because of you, of course.
Right, yeah. So Ricky and I we had conversations before we got on the air, and Ricky and I will continue to have conversation about this strategy after we get off the video. But just want to give you guys more of an overview of what we are going to talk about in terms of raising capital. So, self-directed retirement plan. Most of you guys may have not heard of it because a lot of times when we think of retirement plans, we're thinking of 401ks, IRA, more common with 401k. But a lot of times when we think of 401ks, we normally limit it down to stocks, bonds, mutual funds, and that's really about it. But a lot of people don't know that legally you can actually acquire and buy pieces of real estate or companies that own real estate, right, with your retirement account. Now, some of you guys watching this video may be saying, well, I don't have a retirement account, right? Well, what's to say that you can use other people's retirement accounts to raise capital and invest in real estate, right? So I'm going to share with you guys what happened in my first scenario in raising capital, and to protect the individual, to protect my investor, I'm going to go ahead and replace that person's name with Bob. And I apologize if your name is Bob, but we're going to use this name because it's mainstream. So we have this thing called self-directed retirement plan, which by law it allows us to invest in pretty much anything permissible. I know for a fact that you cannot invest in any collectibles. Way back when this was a new thing, you could have actually invested in wine. You could actually bought the wine as part of your retirement plan. Now, of course, they later realized that people were drinking their retirement plans away, right? People got drunk off of their retirement plans, so that didn't work out quite well. Most people thought. So you can buy gold with your self-directed retirement plan. You can buy even Bitcoin. I know our good friend and attorney Mark Kohler has a phenomenal video about that. You can even acquire pieces of LLC private placement memorandum, which is a little bit more of an advanced strategy, and you can even acquire promissory note, buy notes using self-directed retirement plan. Now, for those who are smart cookies out there, you may have already figured out, oh, I know what he's talking about. But for you guys that are just getting started out, you may not know how to piece that all together. So with the self-directed retirement plan, yes, there is a way of buying real estate using retirement plan. They just don't want you to know about it. At least most of the companies, I'm not going to name names, right? But most financial companies that sell bonds and facilitate or administrators for retirement plans, they're not going to tell you about it because their business, they make money by selling you stocks, bonds, and mutual funds, right? They charge you fees to maintain your retirement plan. So obviously they don't want to talk about the fact that you can buy real estate using retirement plans because if they find out, they know they're not going to make money. So here's how that conversation went with this person, Bob. Bob had a retirement plan. Bob's 401k. And Bob's been working for a company for a very long time, had a decent sized 401k. Bob had a rough number of $100,000 in his 401k. Now, does Bob know that he can invest in real estate using his 401k? Most people don't. Does Bob know that he wants to invest in real estate? Maybe that thought hasn't even come across because he didn't even know he could, right? So the first initial three questions that I would ask individuals like Bob is to even get that conversation started, because this Bob, for you guys out there, may be your family member, excluding anyone that's vertical bloodline, which we'll talk about in just a second. It could be your coworker, it could be your boss, it could be a church member, it could be someone in your community, it could be a friend's parent. That could be Bob, right? And who knows? You may already know your next partner, but you just don't know what you're looking for. So with this Bob, what I've done is I asked three questions. The first question I asked is, Bob, if you don't mind me asking, and I don't want to get too personal, I don't want to overstep my boundaries by asking you this question, but if you don't mind me sharing, or if you don't mind sharing, how much do you currently have a retirement plan that you're investing with, right? And Bob, of course, said, yeah, I've been working for a company, and I have a 401k with that company, and that's what I have. And the next question I asked is, okay, great, Bob. Well, if you don't mind me asking, and again, I don't want to get too personal, but just give me a ballpark figure. How much are you generating in terms of rate of return in your retirement plan? And Bob might say, from my recollection, he said 3 to 4%, right? And I said, okay, well, Bob, again, if you trust me, you can share this with me. If not, I'm totally cool. But roughly in the ballpark figure, how much do you have invested in your 401k? If you don't mind me asking, just a ballpark, right? And Bob said about $100,000 is where I'm at, right? Okay, great. So the next question that transitions over to an actual conversation we may have for you guys in your situation, but for what we did and what I asked is, Bob, if you're interested, and I don't know if you are, and tell me no if you're not, but if you're interested, have you ever thought about investing in real estate ever? Like buying rental properties and fixing and flipping properties? And Bob's concern was, I'm worried about my retirement plan, right? I'm at a certain age where, looking at my retirement plan, I don't know if I can ever retire. I don't know if I could, with the rate of return that I'm getting. So I said, Bob, what if I can show you how to invest in real estate, potentially double or triple your return, or create some cash flow using your retirement plan? Would you like for me to show you that type of plan? Right? Would you like for me to show you how that's possible? And Bob said, yeah, sure. Now, if you're in this is where social awareness comes into play. If you're in a family gathering, if you're in a party or a networking event, don't throw up on Bob, right? Don't try to pull him out from that event and show him what I'm about to show you, right? Just say, hey Bob, let's schedule lunch, right? Let's schedule coffee. Let's go elsewhere. Let's enjoy this time now, and let's go and chat next week, right? So that's called exercising tact. right? You don't want to go all giddy up and get excited and throw up on Bob and say, Bob, let me show you this self-directed retirement thing. This is what we're going to do. No, Bob doesn't want to hear about it. He wants to have fun. If he's at a family event or if he's at a networking event, he wants to meet other people, right? Bob doesn't love you yet, okay? He may love you later if you help him with the partnership that I'm about to show you guys. So here's the conversation that I had with Bob. And I remember this situation because I sat down with Bob at a Dunkin' Donut, and I took out a piece of paper just like this, and this is exactly what I showed Bob to get my initial capital. So I said, Bob, this is what we're going to do. Are you familiar with the idea of self-directed retirement plan? Bob said no, right? So I had to go and educate Bob on what self-directed retirement is and what's possible. So what we're going to do, Bob, is we're going to go and roll over. And notice I said roll over, not withdrawal, because when you do withdrawal, there are penalties and fees that you have to pay. And I know some of you guys are thinking, don't you have to pay penalties? Well, when you do a rollover, what you're doing is you're going from one retirement plan to another qualifying retirement plan. And generally, right, exception to the rule is there's different employers that have different rules and regulations, so you may want to catch on to that. But generally, the broad rule is that there should not be any taxes or penalties when you roll over to another self-directed retirement plan, or another qualifying plan. So what I've done is, Bob, I got a deal that requires $60,000, and of course, this is where we're going to get a little bit sidetracked. You need to be able to analyze deals like a rock star, right? If you don't know how to analyze deals like a rock star, you're going to have a hard time raising capital. Let me just put it that way, right? I know most of you guys are looking for the capital first and then looking for a deal. Well, what you're doing is you're putting the cart in front of the horse when you should be putting the horse in front of the cart, right? So in this situation, I did have a deal, and this is how I explained it. So we're going to roll over $60,000 into your self-directed retirement plan. And we have two options here, Bob. Option one, and you know what? I got a better way to do this. Okay, this is more visually friendly. We can go this way. So we have two options. Option one and option two. Option one is that we can actually have your self-directed retirement plan, whether it's a self-directed IRA or a self-employed 401k, we can go ahead and actually set up an LLC inside of your self-directed retirement plan to where your self-directed retirement plan is going to own 50% and I'm going to own the other 50% of the LLC, right? So that's me and that's Bob's self-directed retirement plan. Now the LLC, we can go in and purchase property using the LLC, and I'm not going to do the math here, guys, of the analysis. That's going to take a lot of time. I'm going to try to keep this short. But let's say this property, this is a buy and hold, and we bought it for $60,000 cash, and it's cash flowing about $500 a month. Okay? With the $500 a month cash flow, because we have 50% LLC and I own 50% of the LLC, Bob's going to get to keep $250. That goes back to Bob's self-directed retirement plan. Notice I didn't say it goes to Bob. Legally, it has to go back into Bob's self-directed retirement plan.
Very important.
Right, very important. And the other $250 goes to yours true. Oh, I didn't mean to put the K in there. See? The big money. $250. The other $250 a month goes to yours truly, us. Now, to answer your question, do we just create cash flow of $250 a month without using our own money or credit? Or there may have been credit involved, right? But if we bought this cash, then no credit, right? Pretty cool. So $250 a month in cash flow, guys, that could pay a cell phone bill, your gas, right? That could be a lot of money if you start racking things up.
That's an infinite return.
Right. So $250, and if you analyze this, 250 times 12 months, that's $3,000 a year in cash flow that we're generating. Right? Pretty darn cool, right? We also we're putting extra $3,000 in our pocket in cash flow. Not bad. Now, option two is instead of an LLC, what we're going to do is what's called a secured we're gonna do a secured promissory note. Promissory note is is another fancy way of saying a loan, right? A debt. Now, secured meaning this note is collateralized with a real estate property. Now, the reason why we do this, the reason why we don't go with unsecured promissory note is that if we mess up, right? If we flunk the deal, right? Bob's gonna get paid with the secured promissory note. Meaning, if we default, right? If we never get to pay Bob back, he gets to keep the property in an action of foreclosure. Now, if this was an unsecured promissory note, that means if I don't pay Bob, right? Bob has nothing to get after. I mean, he can sue me, right? He can sue me to get the money, and he may win, and he will more than likely win. But it's going to be that much harder for Bob to get anything back if I screw him over, right? Now, I know most of you guys are ethical and legal, and you guys want to do the right thing, but I know there's always one that wants to go in and just screw things up. So we're going to go and secure the promissory note, and Bob, let's say, wrote a promissory note for that $60,000 at 12% interest on 6 months. Okay. So in 6 months, can you do a fix and flip?
Oh yeah.
Yeah, absolutely, right? You can go and do some paint work, flooring work, and we can generate some profit. So let's say in this scenario, $60,000 was the purchase and the rehab, right? Which, by the way, it was, and we can generate a potential profit of $30,000 profit. Now, in this scenario, unlike the LLC of 50%, 50%. Right? All we owe Bob is 12% interest on the $60,000 in 6 months. So how we do that is we take 60,000 times 0.12 divided by half because 12. Yeah, we got to annualize it. Or excuse me, the actual amount of interest that we're paying is $3,600. When we annualize it, that's going to be $7,200. Right? So. $7,200 divided by 2, so $3,600 of interest is getting deducted from our $30,000 profit, which is leaving us with a $32,000. I'm sorry, I did the math wrong. 30,000 minus 3,600. We get to keep 26,400 as net for us, and Bob gets $63,600 principal and interest. Okay. Now, you might be saying, well, $3,600 isn't a whole lot of money, right? But here's the deal with this. Bob, whether we mess up the deal or not, is going to get that $3,600 of interest, right? Because this is a loan, not a partnership. In a partnership, if this was a negative cash flow, well, Bob also has to pay up and get in on that negative cash flow train too. Yep. Right? Whether Bob likes it or not, but that's the deal. Now, if we go negative on this deal, let's say we lost $30,000. Well, Bob still needs to get paid $3,600 of interest and his money back, right? So this is more of a safe option. Now, for me in the past, and I'll tell you what actually happened, we actually ended up doing the option 1. Bob ended up taking 50% and I took 50%. But in a fix and flip deal, I actually prefer doing option 2. Right? In option 2, it's more of a short-term thing. I get to keep most of the profit in the option 2. In option 1, I prefer to use this more for buy and hold. Right? It's more for buying a rental and it's just keeping the cash flow for both Bob and for myself. So, any questions from you, Ricky?
Yeah, I mean, let's say a Bob is just getting to know you,
okay.
Right? Why would he want to invest with you? Okay,
that's great. So a couple of things there, and going back to what I discussed earlier is the value, what I like to call the currency economy or value economy. And I'll delete some of the stuff to show you what I'm talking about. So create some space. So Bob can easily go. In a situation it wasn't so, but hypothetically, okay, Bob could have easily went and used his own money to do his own deal, right? But here's where most people, when I meet with potential lender or partner, here's really what it comes down to. Bob has got the money, but we have the knowledge. I'm going to draw a book here.
It's horrible.
I know. There you go. And time and the energy, which I don't know how to. You know what?
Running.
I'm going to do a lightning bolt for
Flash.
energy. There you go. Okay. So Bob may have the money, but we have the knowledge, the time, and the energy. So kind of imagine this as a teeter-totter, right? If Bob's bringing in $60,000 of cash currency, then we need to be able to bring in $60,000 worth of time currency, knowledge currency, and the energy, right? Being able to go out there and motivate yourself and actually take action. So if this isn't lined up, if they're not equal, if Bob's bringing more value in this table than you are, then you're doing a huge disservice to Bob, right? You should bring more value than Bob to where you deserve that $60,000 of partnership contribution, right? So this is why before we even start looking for capital, before we even start raising capital, you got to have these three things down, right? You need to be able to manage your time effectively like a professional, have your knowledge in place. Again, going back to understanding how to analyze the deal, how to underwrite the deal, how to, digesting this and explaining this to an individual takes a lot of knowledge. And what we are going to cover, and what we've covered, is the tip of the iceberg. I mean, we barely scraped the surface on what it really takes to raise capital. I mean, there's so many different strategies, right? We haven't even touched business credit, infinity banking. We haven't touched any of that, right? But what I'm showing you in let's see how far we've gone down. 22 minutes, right, is barely enough for you. So guys, please do me a huge favor. Don't go out there thinking that you mastered raising capital by watching this video. The purpose of this video is to show you what's possible. At least get you started in a direction to where you can do your research, get educated, find books on self-directed retirement plans. There are programs that we can introduce you to that will teach you everything that you need to know. In fact, I myself have gone through 36 hours of training just on this topic, and I still feel like I'm new at this, right? And Ricky's just getting started as a trainee, and we're going to continue having a conversation about raising capital after we're done with the video. But just this conversation alone, guys, it's going to take you a lot more research and educating yourself than what I'm showing you here. So, Rick, any thoughts or questions from you?
No, like you said, it's the tip of the iceberg, right?
Yeah.
I'm sure any questions that anybody else has, just drop them in the comment.
Right. So, usually I have conversations like this with Ricky all the time, and we decided together as a collective to show you usually what I do behind camera, right? On camera, I do a lot of podcasts, and all these videos are great, but I want to really capture what happens between when I share with a real person, right? Not a hologram, right? You can see, right? Right. So you guys can imagine there's a lot of conversation between Ricky and I that we have off camera. What we're showing you is just this tip of the iceberg. But I hope this gave you some idea. I hope it's turning your head to where you can now start your research, right? This is important because if you don't know what to research, right? How do you start? Right? That's a big thing, right? So I hope that this gives you guys a somewhat of an overview, more of this is a starting point for you guys to go and research.
Yeah.
Anything else from you?
No, that would be all. Thank you for having me.
Yeah, absolutely, and thank you for being my guinea pig for today. So, guys, if you guys have any questions, and I'm sure you guys have plenty of questions, go ahead and leave them down below in the comment section below, and I'll be more than happy to answer some questions. We have a pretty good track record in answering any questions or responding to comments, even the negative ones, right? Yeah. So leave any questions down below. We'd love to help you out. And I got some few more resources in the link description down below. So go and check it out because I left you some pretty good goodies. So definitely check that out. And we'll be making more videos like this. Maybe we can do another video on underwriting a deal, analyzing a deal. We can do a video on finding deals, which I've done that before, but we'll go a little bit more elaborate. So guys, that's pretty much it from us. I appreciate you guys, love you guys, and we'll see you guys in the next video.
Thank you.
Well, hello there. You made it to the end of this video. Congratulations, and that probably means that you like our video and you love what we did. So be sure, if you want to get more information, more YouTube videos from us about real estate investing, be sure to subscribe to our YouTube channel and hit the bell icon to make sure that you get notifications on our future videos about real estate investing.